morning, Trinidad and Tobago. Happy New Year and welcome to the Bourse Report. Well, we're kicking things off to start 2025 with a very quick recap of the equity market performance that would have taken place in 2024. Certainly a mixed bag in terms of performance across different markets. Let's take a look at what would have transpired and what investors might be expecting in the year ahead and how you can position your equity portfolio in 2025. Turning firstly to those local/regional indices and index performances. Well, it was not a vintage year by any means in terms of equity market performance at the local/regional level. The Trinidad and Tobago Composite Index, as well indicated in that bright blue column, was down actually about 11.6% in 2024. Contributing to that performance overall was a 12.7% decline in the all TNT index. Those are locally domiciled companies, of course, as well as a 7.7% decline in the cross-listed index. Again, companies that are listed regionally, but also trade in the Trinidad or over the Trinidad and Tobago Stock Exchange. So overall, another year of double-digit decline for equity investors on the Trinidad and Tobago Stock Exchange. So again, not a very vintage year by any means in terms of equity performance. Contributing to those performances, of course, there were many more decliners than there were advances. We're taking a look at the top five in both respects. On the positive side of things, Prestige Holdings Limited was up just about 21.5%. CIBC Caribbean, formerly known as First Caribbean International Bank, was up 15.1%. Of course, CIBC rebranded during the course of 2024. And Macau up around 10.6%. Of course, the group announcing a fairly major acquisition towards the end of 2024, and of course continuing to pursue their 2x goal of doubling profit before taxes by 2027 relative to their 2022-2023 profit levels. LG Williams, of course, a much smaller stock in terms of market capitalization, up around 4.8%, and Unilever Caribbean Limited eking out a 1.8% gain. On the other side of things, of course, very significant double-digit declines. National Enterprises Limited down just about 33%. West Indian Tobacco, or Whitco, down 37%. Garden Media Limited down 45% PTNGL down around 57% in 2024, and LG Williams B down just about 66% in fiscal 2024. So, of course, just eyeballing this particular graph in terms of major movers on the Trinidad and Tobago Composite Index, we can see that there was much more pronounced declines relative to advances in terms of the top five movers in either particular direction. Internationally, however, it was slightly a better reading for investors. Of course, if you had the capability to invest internationally, the S&P 500 posted a second year of very significant double-digit gains, up just around 23.3% overall, and that performance was driven across most of its sectors with positive movements. Communication services, for example, the best performing sector, up 33.2%, financials up 28.5%, consumer discretionary, interestingly, up 25.5%, and technology overall up to 20.8%. Just one decliner in 2024 from a sector perspective across the S&P 500 sectors, that is materials, which was down just about 1.6%. Otherwise, made for very positive reading for investors in US markets. At the broader international level, however, it was certainly a mixed bag. Again, the US posting 23.3% increase versus a 24% increase in 2023. Asia ex-Japan actually posted a second consecutive year of growth, up 7.7% in 2024. Europe, however, just marginally lower overall at the index level compared to a 16.7% gain in 2023, and Latin America, its performance index down 30.4% in US dollar terms relative to a 25% advance in 2023. So certainly not standardized performance at the international level. But if you were investing in the US and Asia, there would have been some cause for celebration in 2024 as an equity investor. For 2025, as we look ahead, what are some of the themes or major drivers that could be impacting equity markets? Well, at the local level, one of those drivers would be cooling inflation. Secondly, would be resilient earnings. So despite that decrease in the index and the decrease in the prices of certain equities, we have been seeing resilient and, in fact, in some cases of blue chip companies, positive earnings. And that has led to actually more attractive valuations. And we expect that to be a theme going into 2025, as well as investors reassess how well, they're currently mixed investor sentiment relative to the economic prospects of Trinidad and Tobago versus some of the actual value on offer in terms of company performance relative to where their stock prices are trading. At the international level, we do anticipate that stronger earnings will be one of those features going into 2025. Cooling U.S. inflation as well will also, or should also, be supportive of equity markets. U.S. interest rate cuts, with just about two 25 basis point interest rate cuts also expected to occur in 2025, which should be on a net basis supportive to markets. However, sprinkled into that is a healthy helping of geopolitical tensions. Of course, there's going to be that administration change in 2025 at the U.S. presidential level, as well as other ongoing rumblings across the globe in terms of geopolitical relations. So what does that mean for investors, and how you should be looking at positioning your portfolio and some of the themes that you should be looking for? Well, of course, at the local level, stock selection remains critically important. Looking for that value bias, and of course, a dividend focus as well in the current environment is going to be a theme. Certainly, there are several stocks, well, not all stocks are trading on equal footing. In fact, there are stocks that are trading at more attractive valuations, and offering investors higher dividend yields at their current prices. So that's going to be one of the areas that contributes to stock selection, as well as companies that have built-in diversification benefits, either by business line or by geography, or both. And of course, those companies that are, or groups that are continuing to pursue accretive acquisitions, looking to expand, of course, outside of just the Trinidad and Tobago jurisdiction. At the international level, well, of course, a satellite strategy remains one that is quite tried and tested. In fact, there's the old adage that 90% of money managers do not outperform the S&P 500 over an extended period of time. So, of course, looking at broad market exposure in terms of just buying an index ETF, for example, or looking at some of those blue chip names, some of those bigger, very well-established companies, is always a strategy that's worth pursuing. And of course, if you are thinking about more broader diversification, you can look at regional diversification, keeping, of course, in mind the fact that not all regions will perform equally, as we would have seen in the case of international regional performance in 2024. So that's it for this week's edition. For more information, you can give us a call at 226-8773 or to Bourse. Email us at invest@boursefinancial.com. And of course, you can check out all of our research absolutely free on our website, bourseinvestment.com. And you can catch this article in today's business section of the Trinidad and Tobago Guardian newspaper. So until next time, stay safe. Happy investing, happy 2025, and we'll see you again on the Bourse Report.